I am Brandy Whitmire. I am a banker, direct lender, broker. We have mortgage loan officer. So basically we are nationwide as well. So basically anything that you can think of, any kind of product you can think of, we've got it. Give us a call, shoot us a message in the DM, email me, whatever you want to do, and just reach out if you have any questions related to homes, mortgages, life, anything like that. We are always here to help, and I love it. I love what I do, and I love helping, and I love making the impossible possible. So today, we are going to talk about, the subject matter will be things that a first-time home buyer needs to know. 10 things every first-time home buyer, and really any home buyer, needs to know. And a first-time home buyer is technically anyone who hasn't bought a home in 3 years. Actually, you get considered for some of the first-time home buyer programs and bonds and grants and things like that if you haven't bought a home or had a primary residence in the last 3 years. So 10 things every first-time home buyer needs to know, anyone that is buying a home needs to know is, 1, you need a realtor. And realtors do not cost you money. When you sell your house, they're going to cost you money. But as a buyer, you're not having to pay a realtor anything to go out and look for homes. So you can go ahead and start your search on Zillow or any kind of MLS website or IDX website, which means like if you went to Ebby Halliday, Coldwell Banker, RE/MAX, Keller Williams, EXP, whatever the case may be, you can go on there and start searching for homes. Now, when you do that, you want to make sure that you are finding a realtor that knows the area that you're in, someone that you trust, and someone that knows how to negotiate on your behalf. But a realtor does not cost you money, and it behooves you to use an agent that you like and that trust. And if you don't have one, I've got awesome agents all over the country, and I can help find you one if I don't already have one in your area, and make sure that you are given the right experience that you deserve and help in negotiations. So, and then number 2, looking for homes. When you're looking for homes, keep in mind that, everybody, you might need a certain school district, or you might need you might want to be in a certain area. Now, if you can be flexible on school districts or areas or things like that, then sometimes going out of your zip code or out of your area a mile or 2, maybe up to 5 miles, can drastically change the price point of the home. So keep in mind, whenever you see a nice neighborhood, more than likely you are going to see that it's going to expand out, right? So let's say you're in a Dallas area, and you have the Knox-Henderson area, like the M Street area, right? Well, it's no longer the M streets, right? If you're from here, it's, every street starts with an M. Well, now it's all the other streets that start with every other alphabet letter, because as you get into these areas, you might, go across the street and the houses will be $100,000 less. Why? Why? Because it is there's a little bit more rundown or whatever. So people like myself and investors will go in there, and first-time home buyers, if you know what you're doing and you can see past things, you can go into these areas, go into another, go a street down and redo the house. And what's going to happen is that more than likely the area is going to expand, and people are going to go in and invest and tear down and renovate and do all the things to get that house comparable to the house that was on that street. So very, very important to understand that if you can see past paint and carpet and the outside pave of a house and landscape and any of these cosmetic things, and you can work on it, you might be able to find yourself in a very good equity position in a few years if you can be a little bit flexible and look a little bit outside your search. And think, keep in mind, it's a distance thing. So, take out a zip code, take out school district, take out things like this, and just go some streets out 1 to 5 miles, and you might be pleasantly surprised on what you can find. Okay. Number 3, when you are online and you are looking at payment, you want to be aware of what you are, of the actual payment. So you want to remember there's 6 parts, or there can be 6 parts to every payment. One is principal, 2 is interest. So that's a PI. Principal and interest is basically the only thing that we can control as the lender, right? Because you tell us what your loan amount is going to be. Actually, you're telling us, and the market's telling us the rate. Actually, lender doesn't really even, can't even really control much of any of that either. But principal and interest is what basically what we control, you and I, as a buyer lender. Say, you tell me what loan amount you want. I'll tell you what rate, what your options of rates are, and that's going to be your principal and interest payment. The third that you're always going to have is taxes. So you want to look at the taxes of that house, divide it by 12, and add that on there. The fourth is going to be insurance. Insurance is hazard insurance. So hazard insurance is like, it'd be the same company that you go for like your car. So if you have Allstate, then you want to go to them and get a multiple discount kind of situation and ask them what the homeowner's insurance. Typically, it's going to be anywhere from $60 to $160, something like that. It just depends. And you want to make sure you're not in a flood zone and get flood insurance, but that's not through them, that's through FEMA. Anyway, that's another topic. And then if you're putting less than 20% down, you have a possibility, or you're going FHA, you have a possibility of having mortgage insurance. Okay. What you also want to look at is if the home has an HOA. If it's a condo or townhome, definitely going to have an HOA due monthly. Some of these single family planned developments will also have an HOA that will be attached to that payment. Okay. Number 4 is you always want to get pre-approved before you ever go and look at a house. Always get pre-approved. Talk to the lender, get your credit run, make sure there's nothing that needs to be done before you go look at houses. Credit scores need to be 580 and up. Anyway, anytime you want me to review your report, if you have one on your own or you want me to pull it, and those two things are very different. But if you want me to review and give you some tips before you start, I'm always happy to do that. Anyone on my team is always happy to do that and help you out. Okay. Number 5, after you get pre-approved, you want to make sure you're not adding any debt to your expenses. So your debt to income ratio. So you don't want to go buy a car. Just a few weeks ago, we had someone go buy a truck when we were about to close because he was moving to the country, and he's like, well, I'm going to buy my truck and I'm going to do this. Well, I added a $400 payment. Boom. Our ratios were out of line and we couldn't get him approved. Well, I ended up figuring it out. However, it made it much harder, and it puts a dent. So you don't want to make any big purchases before you actually close on your home. Okay. Number 7 is basically, I want to talk about basically timeline. So let's say your lease is up in December, right? And you need to move January 1st. Well, you want to time that 60 to 90 days in advance. You want to start looking, at least getting pre-approved, because contract, you might not find something for 30 days, and then contract dates are anywhere from 30 to 60 days to get closed. So time that out on your lease, 1, but 2, keep in mind, if you close on a house in December, you don't have a January payment. Your first payment would be in February, so that January payment is what's going to help you in moving costs, transferring your utilities, and things like that, and buying, painting, buying new things for the new house. So keep that in mind, that you do skip that first payment because it's getting your interest is in arrears. Number 7 is the move costs and transfers again. So making sure you have that timeline. Actually, that was 5 and 6 and 7. So 8. How are you going to get your down payment? You want to know and be prepared for how much down payment you're going to give. So if you're going USDA or you're doing a VA loan, you're going to have 0 down payment. If you want, you can always put money down, but that's a possibility for a 0 down payment. If you are a police officer, firefighter, doctor, hero type bond, you can do a 0 down. If you are a first-time home buyer and you make less than the income requirements of the bond, then you have a possibility of getting your down payment assistance and moving and having a zero down payment. If you're going FHA, it's 3.5%. Going conventional, minimum of 3%. We really like 5, but you can do 3, and so on and so forth, and you can put more down as you go. So you want to be prepared for how much you're going to actually have to put down of your money before you close. And you can get that from your 401k, you can save it, you can get it as a gift from a family member, whatever. Yeah, if you want options on that, let me know, and we can work on that. Number 9, closing costs. So who's going to pay the closing costs? How can you pay for closing costs? Closing costs can be anywhere from $0 to 10 grand, right? The typical amount is probably going to be about 1 to 1.5% typically of the sales price. But closing costs can be, if there's room, and realtors don't get mad at me, if you can put it in the contract, you can put seller concessions in the contract to take care of your closing costs. So if the closing cost is 3 grand, you can write the contract for 100,000, seller concessions 3,000. That takes care of closing costs. Never the down payment, but it can take care of your closing costs. Another option to pay for closing costs would be to pay for it with your rate. So let's say it's a 4% rate, but 4.5% gives you 3,000. I can take that, give that back to you as a lender credit to help cover your closing costs. And then, of course, the third option is to bring it to the table, or if you're refinancing it, obviously rolling it into the loan, should there be room. And number 10 is preparing yourself for your next financing. Now, if you're a first-time home buyer, you're getting into an FHA loan and you're putting the minimal amount down, even if you have more money because you just want to be safe, you don't know how it's going to be, you're worried about things are going to break down or whatever, and you want to have that cushion, then after 6 months to a year, you want to make sure you're putting into place refinancing, especially right now when rates are hiking up. People are a little bit more scared to bite the bullet and get in a home. But I'm telling you that the rate increasing is very good for us. It's very good for the economy. It's very good for inflation. It's very good to make sure that we are in a very good place to not go back into a 2008 crash. Will it happen? Who knows? But rates hiking up is actually good for us. Now, what it is also good for is it means that it's likely to go down again eventually. Who knows when? It could be next month. It could be in the next administration. Who knows when it's going to be? However, it gives you opportunity to refinance later and get into a lower rate. And you can go to a 20-year, 15-year. You can move it around. You can go from a FHA loan with mortgage insurance, refinance to a conventional mortgage that has lower mortgage insurance that drops whenever you have 20% equity in. So just keep in mind that there are options, and don't worry too much about the rate right now, because a lot of people are like, oh, that's 5.5%. I don't want that for 30 years. No one keeps their loan for 30 years. I've never seen it in 18 years I've been doing this. And I wouldn't let you if you were my friend or client anyway, because it wouldn't make sense. It would never make sense for you to keep a loan that long. So don't be so conscious of the rate. The rates are what they are. They're going to be, right now, they're what? In between, I quoted jumbo today, 3.875 all the way up to 4.625, right? Depending on the program. Now, 4.625 on a 30-year fix, that's pretty good. He's like, that's high. I'm like, that's not high. It's not high at all. However, I understand because we've been so spoiled over the last couple of years with our ridiculously historically low rates. So keep in mind that your mortgage can be your side hustle. Your mortgage can actually help you get more equity. You can refinance with no closing costs and do all these things that we were talking about before. So anyway, that is today. That is your 10 things you need to know as a first-time home buyer, and actually any home buyer. If you have any questions for me whatsoever, I'm always here. Again, reach out to me on Messenger, email me, bwhitmire@financebyhome.com. You can call me, 469-879-5949. Reach out to me on my website, brandywhitmire.com. And I really hope that you reach out to me. Shoot me over any questions that you have, and I will see you next week. Thank you.